Did you know it is a mandate for every employee in Uganda earning above 235,000 Ugandan shillings to pay employment income tax remitted by their employers to URA by 15th of each new month? But anyway, what is the employment income tax or pay as you earn?
Employment income tax, or what we call pay as you earn, because it is collected monthly, is a form of income tax that is collected from persons that have employment. We look at the employee who is earning from this job to make a contribution to the URA through the employer. One thing you to realize is that while we are collecting tax, we have basically three forms of income. We have business income for those who are involved in business. We have employment income for us who are employed or who are engaged in employment. You have a job and someone is paying you money at the end of a given period of time.
How does URA collect this tax and who pays it?
It is the employee who pays, because he's the one or she's the one who is earning the income from the job where they are employed. And the responsibility to have the tax remitted to URA is for the employer, because the employer is the one who pays the employee. So when you have your employer like Family TV will be required to withhold money from you, from the salary that it pays you at the end of the month, and pays to URA, okay, that month as your pay as you earn or employment income tax.
Is pension received by retired people also taxed under this employment tax?
Yes, there are certain things that you get while in employment that are not part of employment income, because not everything is part of employment income. For example, a pension. For our colleagues who work with government and at the end of the period you pay the pension, that pension is not subject to employment income tax. Medical expenses, if your employer decides to discharge or reimburse medical expenses, like you get sick, they tell you there is a particular clinic where you're supposed to get medication, or you spend your money and they're reimbursing it to you, that is not part of employment income.
If it is mandatory, does a low earner really enjoy their salary? By the way, what exact amount does URA start charging pay as you earn?
If your employer is employing you and what they pay you is less than 235,000 shillings a month, that amount is a threshold. It is tax-free money for everyone. Even for those who are taxed, the amount must exceed 235,000 shillings a month. So before computing employment income, employers are required to give every individual Ugandan a threshold of 235,000 shillings as tax-free money. So it is not subject to employment income tax. What I implore the employers to do is to look out for this information on employment income tax, to be in position to know what is subject to tax and what is not subject to tax. But the underlying principles are any form of allowances, once they're given as allowances, they are added on to the basic pay. But if they're like refunds, an employer decides to get a central place where everyone is having meals, including the directors, that meal is not a benefit. It is not included on the employment income tax.
Robert, could you please help a citizen understand how they benefit from paying pay as you earn?
This country belongs to all of us. If we want socio-economic infrastructure, if you want drugs in hospitals, if you want roads, a good road network, you want government to facilitate payment of its employees, there are these administrative units that government has set up. There are certain government projects, MIOGA, parish development model. When the Minister of Finance reads the budget, he's showing you that I'm planning to spend this amount, but he doesn't have the money. The money is supposed to come from me and you. So that's why we say that as you're employed formally, you are supposed to ensure that if you have an employee who is earning above 235,000, put them on the list of those that are supposed to pay or contribute a little from their income.
And what happens when one defaults paying tax?
When you default, first we look at the employer, because the employer ought to have withheld tax from the employee before paying them. So when you are lazy and you're unable to withhold, you become personally liable. So failure to withhold tax from the employee means that you become personally liable to pay the tax together with any penal tax. You know, when you fail to pay tax, when you fail to file a return, for starters, any return that becomes outstanding is charged a penal tax of 200,000 shillings a month for the period that that return remains outstanding.
Who is taxed 40% of the pay as you earn?
You know, we have three rates, three categories, brackets of collecting tax. We have the first bracket for those who earn income, employment income that does not exceed 235,000. Those ones do not pay. Then we have a second category for those who are earning between 235,000 and 335,000. Those ones are taxed at a rate of 10% of what they earn minus the 235,000. Then we have another category for those between 335 and 410. Those are taxed at a rate of 20%, but after removing what they earn from 335,000, but there is also 10,000 from the first bracket that they add on. So the maximum amount there is about 25,000. Now, the last category is for those that earn above 10 million. If you earn above 10 million, there are two subcategories. Now, the first subcategory there is you get the amount that you earn, which is maybe 14 million a month, okay? Then you reduce it from the 410,000, okay? Multiply what you remain with by 30%, okay? And then you add on the 25,000 from the previous two brackets. Now, the same income of 14 million, okay, goes to subcategory 2, where any excess of the 10 million is taxed at a rate of 10%. So you get your 14 million minus 10, remain with 4 million, subject the 4 million to 10%, which is 400,000. And you add it to what you have previously computed. Why? Because government introduced that additional 10% for persons who are seemingly earning much more than the others to have that to pay. And that is why you see some people tell you, I'm taxed 40%. The essence, it is not 40%. It is 30% plus 10. 30% plus 10 for those who earn income that exceeds 10 million shillings a month.
Meanwhile, all citizens should know that the government uses these funds to develop the country. This is Citizens Brief.